Hello, in this session, I want to give you a review of the field of finance, specifically on business finance. So, as we begin this course, I'm sure you might be asking yourself what the course is all about and maybe what is going to be covered in this course. So, as some of you know, that finance as a discipline, especially in this course, what we're going to try to do is to emphasize on some of the items that you have covered in previous classes, specifically in ACC 120 or your first accounting class. So we're going to emphasize on financial statement analysis, time value of money, which is a very important concept, and we're going to use this in numerous chapters. Management of cash flow, risk and return, a very important concept in finance, and of course, sources of financing, both long term sources and short term sources. So, the field of finance uh, basically borrows heavily from two disciplines, in fact, from three disciplines. It borrows from economics, it borrows from accounting, and it also borrows from mathematics. In math, we use statistical concepts, standard deviation, correlation, coefficient of variation. Those are some of the concepts that we are going to borrow from mathematics to try to apply to finance. In accounting, of course, is going to be on financial reports. It's going to be our basis of information. So again, understanding the financial reports, the structure and what kind of information is in those reports is very key. From an economic perspective, again, how the economy is doing, the overall picture of the economy, think about in terms of inflation, for example, think in terms of growth, is the economy is growing or the economy is declining. Those are issues that we also have to consider when it comes to making financial decisions. But keep in mind the primary goal of this course, which is the primary goal of financial managers or financial management, is to maximize the wealth of the shareholders. And we're going to see how is it is done towards the end of this presentation. So, just to iterate what I've said is, if you're looking in terms of the finance, some of the things that we're going to try to cover or topics that we're going to touch on will be, of course, an introduction to finance. Then we're going to go back and try to review the first accounting class that you took in terms of the review of the accounting information, and that is the balance sheet, the income statement, the cash flow statement. And then again, we move a step further into financial analysis, which is basically again analyzing those the accounting information that you have in terms of the balance sheet, the income statement, but we try to do like ratio analysis or trend analysis. So we're going to do that. And then to build on that too, then we move to financial forecasting, which is basically the same thing you have seen in terms of the income statement, in terms of the balance sheet, but then we are talking about the financial statement, not of what has already happened. We're talking about in the future. So this basically we are forecasting. We are saying, okay, if we can make some projection on our sales number, if we think our sales number are going to go up, and we have the inputs or the resources to support those kind of sales, what would be our income statement look like? What will be our balance sheet look like? Those are things that we're going to try to see when we go through here. And then we're going to look into operating leverage and financial leverage. Again, that's just an extension of account information here, because remember the earnings before interest and taxes is a concept that we learn in accounting, which is part from the normal operations of the business. What about if the company goes and borrow in terms of if they borrow on long-term basis? If they borrow on long-term basis, then they have to pay interest. If that's the case, then we have to think about in terms of what is the financial leverage. If a company borrows, does it make them better or not? Again, we're going to address that issue. So the up to here, so far all the way up to operating and financial leverage, it's all the accounting information that you have covered in your previous classes. And then we are going to look at working capital and current asset management. Again, this is more of an accounting issue, but again, our focus is more into finance, sources of short-term financing. We're going to look at that. Time value of money, again, is a very, very, very important concept. So I will again advise you, when we get to the time value of money, make sure you understand the concept. I know you've covered this in any other class that you've taken, for example business math, or even maybe in accounting class, but I will tell you that concept is very critical in finance as a discipline. So get this concept right, and you'll have no problem moving forward in terms of, again, for example, when you're doing the valuation concept, in terms of value securities or assets, how do we go about it? We use the time of money, the time value of money to value securities. We also going to look at the cost of capital, uh, the capital budgeting decisions, the risk and capital budgeting. Then we also going to look at the long-term source of financing in terms of bonds and in terms of leases. Then we look at how we price common stock and also how we price preferred stock, or how that becomes a source of financing. And of course, if time allows, then we're also going to look at the dividend policy and retain earnings for any given company. So this basically gives you a snapshot of some of the things that we're going to try to cover in this course as we go along. So you can see most of this, some of these concepts you're familiar to because you've covered this in your previous classes, especially in your first accounting class. So you learn through this as we go through. And then just to give you a summary, again, we're going to start our discussion mostly by looking at accounting information, but keep in mind that the field of finance, it basically borrows heavily from economics, it also borrows from accounting, and also borrows from mathematics or any other discipline. So we shall, of course, we're going to start our conversation in this course by looking at the accounting information first, and that's where you're going to see how this is the course borrows from accounting. So I would also want to emphasize, again, I can't emphasize enough, that you'll see that yeah, the issue that we're going to try to touch on, or what our emphasis is going to be in finance, will be the risk and return relationships, capital sourcing and allocation, capital structure theory. So we look at, for example, in terms of your when you try to finance for your assets. So the question is, are you going to use debt? Are you going to borrow? Or are you going to use equity? Again, how much of equity are you going to use? How much debt are you going to use? That issue is going to be addressed when we're looking at capital structure theory, and we try to address whether there's an optimal capital structure. If it's there, we're going to figure out when we get there. Then from economics perspective, you look at inflation and how inflation affects the required rate of returns. That is basically the risk and return relationship. We also look at the required rates of return for capital budgeting decisions in terms of projects. What could be a required rate of return on any given project, and then some of the other tools that we use to assess projects. And then, of course, cost of capital becomes also a key important aspect when it comes to uh, 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 this course. So let me know if you have any questions, but hopefully we're going to enjoy the things we're going to cover in this course. Thank you.